Hello everyone. So this side CA Ishita Chavda, and today we are starting with cash flow statement. Okay, so let's discuss it without wasting a single minute. We want to discuss it and try to make it easy for everyone. Okay, so what is cash flow statement? Cash flow statement basically, as you can understand from its nomenclature as well, like cash. What is cash? Cash means what is in your hand, what is at the bank, what is in your hand, like checks which you have not deposited, or marketable securities which are held trade investment for 3 months. So these all are kind of cash. Okay, then what is flow? Flow means inflow and outflow. You can understand from the word flow itself, like in case cash is coming in and in case cash is going out. Cash is coming in from a simple example of a trader. If he purchases some goods, what he have to pay? The money, that is outflow. And in case he sells, and then what will? The money will comes in the business, that is the inflow. And the statement represent the report. That means because what we are preparing in our financial statements are the books, you can say P&L, trading and balance sheet, and it is also the statement which is required by as per AS3 revised, so that we can better understand that from which activity, from which part we are generating how much cash and where we are short of it. Okay, so understanding this, first of all we will understand this table, this complete chart, and then I will also make you better understand the history, the idea behind preparing this cash flow statement. Okay, got my point? Okay, so first of all, as I told you, cash flow statement, it is divided into 3 parts, CFS. First is cash. Cash means cash, bank, marketable securities. Flow means inflow, outflow. Okay, coming in and going out, and statement is a report. And also with one of the small example we can understand, like we can see in our house a water tank. Everyone has that water tank in our house. Okay, this is a tank. What happened when the water got deposited in this tank? That means it is a inflow. Okay, and from this tank the water goes to different taps of our house, either in kitchen, in washroom, anywhere. So when it goes out with the tap, then it is outflow. Okay, so what happened? Similar, if you understand with the business, like it is the business, funds are coming in and funds are going out, coming in through the sales or goods and services, and going out in the form of either you are paying any rent, you are paying any salaries, you are paying any purchases, all that. So but it is a mixture. We don't understand where it is coming and where it is going. So there the need arises that we will prepare a statement and understand from our operations what is the cash we are generating or whether we are short of it. Okay, and second point also, I think that I will tell you later on after this completion of the chart regarding the net profit, because that is also very important base of understanding what is the requirement to prepare cash flow statement. Okay, let's come back here. First of all chart, and then as per our AS, and the cash flow statement is prepared in the 3 parts: operating activities, investing activities and financing activities. Okay, first is operating activity, second is investing, and third is financing. That's if we want to understand what all are these 3 activities. Okay, first we'll start with this financing one. Financing activities means finance. Have you heard the word finance? Finance, what does it mean? It means you need some funds for your business, for running of your business, and when you need, then you will borrow that money, but you have to pay also that money. So in the form or in the kind like share capital or long-term debts like debentures, and share capital and equity share and preference shares. So in whatever form you are raising funds or paying them back, You have to, obviously, if you have borrowed some money, you have to pay back. That means issuing, in case of issuing, if you are issuing any share capital, issue of share capital, then what it will? Inflow. It is inflow. You will get the money. And in case of repayment, like you will repay your debts, repayment of debts, that means you have to repay the funds, that is outflow of your cash. Okay. So these all kind of activities will be covered under financing activities. Next is investing. Like you have all have earned, even you have seen in your families also, whenever you earn something, you have some money, you want to invest it at some place, either in property, in land. Similar it with the business. Either it will invest in land, either it will invest in plant, either it will invest in furniture, anywhere, in goodwill, anything. So wherever we will invest our money in tangible or intangible asset like fixed assets, so that will be our investing activity. Okay, and in case we will sell that plant, that land, that will be our inflow, and in case we will purchase it, that is our outflow. You can understand, like if we purchase, what we have to, land is coming in, is in, and cash goes out. So if cash goes out, that is a outflow. Okay, and if you are selling land, if you are selling land, then cash is coming in and land is sold out. In cash is coming in, that it means it is inflow. Okay, I think it is clear. Okay, then we will come to operating activities. What are these activities, Pam? I don't understand. Okay, look, other than investing and financing are the operating activities, or we can say the major, the principal revenue generating activity, means जो हम the work which is our main purpose of our business, like for which we are working. Like I am having a showroom, or I am having a shop of stationery. That means my main work, my main purpose of the business is selling of books, notebooks, pen, pencil, like that. This is my main activity, my principal revenue generating activity. Purchasing land or selling a land, it's once in a moon, not every time. Okay, so this is our operating activity, that is the main purpose of the business. Okay, got it? So this is all what is the chart is about. That cash flow, what is cash flow statement? Then it is divided into three parts, that is operating, investing and financing. And we will prepare cash flow statement by two methods, that is direct and indirect method. Okay, so today we are discussing the indirect method, and prior to going to indirect method, I want to make you understand the main logic that I was previously saying, that some net profit was here, where we can understand what is the main logic behind preparing the cash flow statement. Okay, so what is net profit? Net profit, when it arises, when we will prepare the P&L account, then the net profit is there. Okay, whenever we are having our P&L ready, then we are having net profit. But as I know, net profit is a kind of item that is diluted, not the pure form of cash. Also, give me a small example. Sometimes what we have seen in our books is net profit is too high, but still there is short of cash, means cash is very less or no cash is there. Okay, then sometimes what happens, that net profit is very high, like say for example it is 3 lakh, general example. Okay, 3 lakh, but my cash in my books balance sheet is showing only 10,000 or less than that, or zero amount also. Okay, so what are the reasons why, when I'm having so much high profit and I'm having very less cash. We must understand. So cash flow statement depicts that what are the reasons why we are having profit but still we are not having cash. Okay, and in case the example goes the vice versa, like net profit is low, like net profit is only 20,000, but my cash or cash equivalents, I may say, is 1 lakh. It may happen. There are reasons. Here the reason is depreciation. Like depreciation amount is too high that our net profit goes low, but our cash is too high. Okay. And in this case also net profit is high but cash is very less. Like the reasons are like the credit sales. We are having the credit sales and cash sales both in our business, so we are less of cash but we are having huge profit. Okay, getting my point? So these are the reasons, so that we must better understand. Also for future planning, we must be knowing what is the cash generating capacity of the business, because we have to take some major decisions, capital budgeting decisions and all. Okay. Okay, so now come to the formula, or you may say basically if I will talk in the general language, like the cash flow statement, we all have understood what is cash flow statement. 3 types activities are there, direct, indirect method and all. But what is our main purpose is to solve the question, because question will come in our exam. Okay, so for that we will understand the formula and we'll try to understand and keep it in our mind the way I am telling. Okay, it will help you a lot, that you never need to learn. Basically it will got remember in your mind as the complete process. Okay, so what is the requirement? Like backward working we will do. I will make a small P and L here, P and L. Okay, so here is my net profit. Okay, everyone knows it. And here are some items like depreciation, provision, amortization, or profit on sale of plant and machinery, and so many items. Okay, then my net profit will come. So if we will keep this P and L in our mind, and we thought that we have to go upward, okay, backward working we will do, those items we have to remove from the net profit, because it is diluted item, having cash, credit, non-cash items also. So we have to remove those items so that we can get the exact cash from our different activities. So first of all we are discussing operating activities. Okay, cash flow from operating activities. Okay, so what is the process of preparing it? Okay, first would be balance as per P&L, we can say, or net profit before excess and extraordinary items. You can see this chart, complete chart in your books as well, but to make it understand I am writing the main points over here so that you can understand what is there in books. Okay, so first of all, net profit before taxes and extraordinary item. For that we have to take 3-4 things, like first of all balance as per P&L. What is balance as per P&L? It is closing minus opening. So you can write it any of the two ways. Either you can write balance as per P&L or balance as per surplus. Sometimes it is the word surplus. Or you can say opening balance P&L, closing balance. First of closing balance, then opening balance, and then subtract them. And in this balance as per P&L, you can do the working over here like closing minus opening, and then you will get the amount. Okay, balance as per period. Then transfer to reserves. This is also similar to this. Transfer to reserves means same, closing minus opening. Okay, then plus proposed dividend. You will write down add. Then provision for tax, add करें. Then entering dividend paid during the year. Okay, so this way we will come at net profit before. Also, sometimes there are extraordinary items as well, like any earthquake has came or anything like that. You have got any compensation. Okay, that is not the nature of all these things. So, in case it is loss, extraordinary loss, then we will add it. Loss we will add from extraordinary item, and profit we will subtract from extraordinary items. Then after this, our net profit before taxes and extraordinary items will come. Net profit before tax and extraordinary items. Okay. Then there comes some items which are of non-cash natures. Then we will adjust them, like depreciation, provision, or the items which are not of operating nature, like those are of investing or financing nature, like some activity like profit on sale of plant and machinery. What is plant and machinery related to? Investing activity. When it is related to investing activity, then what is the use of it here? We will remove it. Similarly, provision and depreciation, both does not involve any cash movement, so we will remove it. Okay, remove the effect. Okay, so we'll add the depreciation because in P&L we have subtracted amortization of goodwill. Or there are so many items, 2-3 items I am writing now, just you can see from your book. Okay, profit will be subtracted. Profit from sale of plant and machinery. In case of loss, you will add it. Okay. Then our profit will come net profit before working capital changes. And working capital changes, we will take the two items, that is current assets and current liabilities. So what is here? Add. It is the heading which we have to write down every time while preparing this. So add. What we have to add? Increase in current liabilities and decrease in current assets. So in case of any of the current liability, if it is increasing, then it will be added. In case of decrease in current assets, then we will add it. Okay, and vice versa. Like in case vice versa means in case the increase will become decrease and decrease will become increase, then what will happen? The sign changes. Like in case increase in current assets, then it will be subtracted, and decrease in current liability. Okay, so you will take this Then you will get the profit after working capital changes. After working capital changes, you can write flow from operating activities. Then, but you have to adjust two more items. One is the extraordinary item. In case of loss, it should be subtracted. In case of profit, it should be added. And in case you have paid taxes, then you will subtract taxes paid. Then you will get cash flow from operating activities. Okay, it may be positive or negative. It depends upon the question and the numbers. Okay, so this is all what we have to do to make it understand the operating activities. I think, hoping it is clear to all of you. In case you find any doubt, you can mention it in the comment box. I will revert you. Okay, so this is all which we have to do. First of all, we will take the balance as per P&L, then transfer, then proposed dividend, provision for taxes, interim dividend. Okay, then what will we have to do? Adjust the P&L items that are not of cash, non-cash nature, or either they are related to some another activities like investing or financing. Then we will adjust them also, interest on debentures or and like that, anything that is not related to our operations. Then you will do the working capital changes, and then it will arise the operations flow. Then you have to adjust two items, that is extraordinary item and the taxes paid. Then you will finally got the cash flow from operating activity, you must say. Okay, that's I think. And then after this, as you can understand all of this, then we'll do the numerical. Friends, let's discuss the numerical on the basis whatever we have discussed. Write the formula, what are the operating activities or investing activities. So we are just doing the part of that. Okay, so I think we must move on to the numerical. This is the numerical which I have written. This is the question, and I have put in the solution, and I will make you understand each and every step what is being done over here. Like operating activities, what we have discussed yet is, first of all, we have to take the profit or the reserves. So what we have taken, first of all, cash flow from operating activities, then net profit or balance as per P&L or balance as per reserves. Okay, so net profit before taxes and extraordinary item, balance as per PL. First we will take the opening and closing. We will take the difference of both of them. So what is its closing balance, then opening balance, and you can write it down like this way also, balance as per P&L. If you don't want to write at two times, you can directly write down as balance as per P&L, and in bracket you can show like 3 lakhs minus 2 lakhs. What is balance is 1 lakh in the outer column. This way you can also show, and this is also the correct way to show this. Okay, as we have already discussed that we will do the upward working. Okay, so we will take the items whatever it is given in the question one by one and try to understand where it will fall and where we have to show it in here. Okay, then what is bills receivable? Bills receivable, what is bills receivable? It is current asset or liability assets. Okay, so you can mark it for your better understanding so that you will not skip. Also you will get the point, what is the use of this, what is the use of this, and then it is depreciation. Okay, then depreciation we know that we will use. Okay, outstanding rent, what is outstanding rent? It is current liability. Then prepaid insurance, what it is? It is current asset. We have prepaid in advance. Okay, goodwill. Okay, intangible asset. Okay, and it is intangible asset. Okay, then inventory is current asset. Okay, so current asset and current liability we will be needing in the changes in working capital. So other than current assets and current liability, we will take what is other than P&L. We have already taken accumulated depreciation and goodwill. So what we will do for depreciation. If the depreciation is increased, like from 3 lakh to 3 lakh 20,000, that means depreciation is increased. That means that 20,000, the difference we have charged in this current year. And as you all know that depreciation is a non-cash item. That is a non-cash item, as there is no involvement of cash. Have you ever heard about it? Like we have paid depreciation to someone, we have paid depreciation to this person. No, because depreciation is a kind of non-cash. Just it is shown in P&L, but there is no cash involvement. So as in P&L, what we do is we will decrease the P&L, that means profit, by the depreciation amount. We will decrease it. So for the upward working, so we will add the depreciation chart. That means profit before tax and extraordinary item 1 lakh, add the depreciation 20,000. Got my point? Next is this is okay, that is goodwill. Goodwill is intangible asset, as I have already told you, and again telling you the same, like intangible asset goodwill. Goodwill, if goodwill is increased, that means we have purchased it, because it is an asset, not any expense or that. Goodwill is an asset, intangible asset that we can't touch. Okay, so if in case it is increased, then it is related to investing activity. But if it is decreased, that means it is amortized. Amortization is very similar terminology to the depreciation, as depreciation is for fixed assets, tangible assets, and amortization is for intangible asset like goodwill and patents and all. Okay, so in this case, what has happened? I don't know, is it increased or not? I will check from the years, like it is 2021 and 2022. So from previous year it is decreased. That means we have amortized our goodwill, and it is also similar to depreciation, no involvement of cash. That's why we will also add it back, because while calculating profit we have deducted it, but there is no cash involvement. We have not paid any amount to this. So for approaching towards the, you may say, towards the cash, actual cash, we will add this back. How much it is? 40,000. So amortization on goodwill is plus 40,000. Then we will come at 1,60,000. What it is? It is profit before working capital changes, as we have not till now taken any of the current assets or current liability. As I assume that everyone of here know what is working capital. Working capital is current assets minus current liabilities. So in working capital changes, what we will take into account? Current assets and current liabilities. These two things we will take, no fixed assets over here. Okay, so when I am asking about working capital, that means we need to consider current assets and current liabilities. And what is our formula? Our formula is increase in current liabilities and decrease in current assets should be added, and vice versa. In case increase in current assets and decrease in current liability will be subtracted. So same terminology, we will write it down. Add increase in current liability and decrease in current assets. Okay, and opposite to that, increase in current assets and decrease in current liability. Okay, so we will write this heading first of all, and then we will add these two items. Okay, so what one by one current asset and current liability we will take and check whether it is increased or decreased. And if it is increased, we will write down at the particular place. If our current liability increase, then we will write down here. If our current asset increase, we will write down here. Okay, so first of all, current asset, bills receivable current asset, is it increased? Yes, 40,000. So we will write down at the minus sign, that is 40,000 increase. Then this we have already checked. Outstanding rent. Outstanding rent, what is it? It is current liability. So if it is increased, yes, it is increased, then it must be added. Okay, it must be outstanding rent, it should be added. Then prepaid insurance. Prepaid insurance is our asset. Okay, asset. In case of asset decrease, we should add it. We should plus it. So prepaid insurance added. Goodwill already taken. Inventories. Inventories are our stock and it is current asset. So we'll check. It is increased. Asset increases, then we will subtract it. Okay. Then it is in the left side. We will total it and it is our cash flow from operating activities 1,06,000. It is the part of cash flow statement. As I have already told you, cash flow statement is divided into three parts: operating, investing and financing. One by one we will consider each and every activity, and there are so many adjustments also here that we have to take into consideration while doing the questions. But to do all these things, we have to move step by step. We can't do all the things at the same time. So, my dear friends, you have to understand what is cash flow from operation. I'm hoping that it is clear to all of you, and thank you.